Could I have your attention, please? If I could get everyone's attention, please. Ladies and gentlemen, please join me in welcoming our webcast viewers. My name is Gillian Riley. I'm the president of the Canadian Club of Toronto and your host. Thank you for being with us today. As you know, the club does a great job of providing a forum for business, political, and cultural leaders to share their ideas with us. Today's panel is a perfect example. Le Canadian Club est fier d'organiser des rencontres qui réunissent des personnalités du monde des affaires, des figures politiques et des leaders d'opinion. Notre panel d'aujourd'hui est un bel exemple. I would like to acknowledge the generous support of today's sponsor, Borden Ladner Gervais, BLG, represented by Andrew Harrison, and RBC, represented by John Stackhouse. Thank you. Now I have the great pleasure to introduce our panel. According to the Canadian Bankers Association, 614 million online banking transactions were completed by the big six banks in 2015. Mobile transactions numbered 202 million during the same period. Investments continue to be made to enhance the banking experience in bigger and bolder ways. We're excited to hear how the group heads of three of Canada's big banks are planning for the future. And I would just add that I have a very personal interest in hearing from this panel today, as it will be important for my future. Let me start by introducing Colleen Johnston, Group Head, Direct Channels, Technology, Marketing, and Corporate and Public Affairs, TD Bank. Colleen is an award-winning banking executive known for outstanding achievements professionally and in the community. She has held a number of senior roles over her more than 30 years in her career. And I might add and congratulate Colleen on her announced retirement yesterday from the TD Bank, and I'm sure we'll hear more about that. We're delighted you're with us today, Colleen, and I have known Colleen myself for many, many years. So thank you. Neil McLaughlin, Group Head, Personal and Commercial Banking, RBC. Neil has responsibility for the strategic direction of RBC, as well as the banking business in Canada and the Caribbean. A senior manager and executive for RBC for 19 years, he has an intimate knowledge of all aspects of banking operations. Thank you very much, Neil, for being with us today. I'll just let you know I started my career at the Royal Bank. James O'Sullivan, Group Head, Canadian Banking, Scotiabank. Since 2015, James has been responsible for all retail, small business, commercial banking, wealth management, and insurance operations. A senior leader at Scotiabank for more than 27 years. And James happens to be a good friend and a close colleague. So thank you, James, for being here today. Moderating this afternoon's discussion is banking reporter for the Globe and Mail's Report on Business, James Bradshaw, who has been with the national newspaper for more than 10 years. Mr. James Bradshaw and your panel, it is my pleasure to welcome you to the stage. Thank you.
All right. Thank you very much, Gillian. Thank you so much, everybody, for being here. This is a wonderful crowd. I'm really excited that you could all join us to talk a little bit about the future of banking. I'm going to apologize off the top in advance because I've been battling a bit of a bug for a couple of days, so if I start croaking through this, I apologize, but it's all the more reason to let our esteemed panelists do most of the talking, which is just fine by me. From a personal standpoint, as a journalist, it's a great time to be covering banking because there is so much change and so much flux right now. There's technology that's changing customer expectations and habits, and the banks have to meet those expectations. You've got a burgeoning fintech sector that's bringing new ideas and new software to the sector, and that's another challenge to grapple with, but also an opportunity, I think. You've got things like artificial intelligence, which bring the prospect of greater automation, which can make things faster, smoother, more efficient, sometimes cheaper, and also give us the prospect of harnessing the vast amounts of data that banks have about their customers in really interesting ways. And you've got a regulatory environment that's changing, and that's important because it's important to the stability of the system, but we know it can be a bit of a headache to the banks as well at times, and a difficult thing for them to navigate. So there's a lot happening, and I've heard it said more than once that banks, the biggest banks, are big ships that don't always turn quickly. The flip side of that is they can be very steady in a squall. And we're really lucky, we're really fortunate. We've got three very seaworthy panelists here with us today to help us understand the courses that they're charting to see their banks through a really interesting time. So thank you all for being here. I do just want to make one note, which is what Jillian said about Colleen, who announced her impending retirement in April from TD after a very long and distinguished career. So I want to say congrats to you, Colleen. It's a big loss for banking, but I thought, how lucky for us, because here she sits, no doubt feeling unshackled and ready to give her most unvarnished opinions on the future of banking. So I assume I've got that right, and I look forward to that. I've been covering banks for about the last 9 or 10 months, and I hear a lot from banks that the customer is at the heart of what they do and comes first. So that's where I'm going to start. And I'm going to begin with a statistic which was in a report I was reading recently. And the headline was that the usage of mobile banking had more or less doubled in the last 3 years, which is probably no surprise to anybody here. Buried a little farther down, and I thought just as interestingly, was a stat that said that 58% of those customers had banked through at least 4 channels in the last year. And by that, I mean they'd probably been into a branch, on the telephone, online, and on a mobile device, at least. Which tells me that, you know, we're in a real period of transition, but we're not sort of letting the horse all the way out of the barn here yet. So maybe you can do the honors and kick us off, Colleen. And I wanted to begin by asking, what do you hear most from your customers about what they want your bank to do differently nowadays?
I think you always have to keep coming back to the customer experience. You mentioned that earlier. And, when we think about our strategy, there's a lot of talk in banking these days. I know we're going to talk about fintech, who's going to win and who's going to lose, and that seems to be the debate. But I really feel that the winner in the digital economy is the customer. And we're in a day and age where the consumer is driving the bus. And the more and more you think about that consumer, and what they want. You mentioned all the different channels. We've had a lot of channels for a long time. The ATM is about 50 years old. Online banking is about 20. We've obviously had branches for a long time. Mobile is newer, but growing. It's in terms of financial transactions, it's the #1 channel. I think what customers want to see more of, though, and I think they get a great experience in all of those channels, I think they want to see more connection. They want more ubiquity across the channels. What you often hear bankers talk about is omni-channel and the ability to connect, create that connected, personalized experience. And I think that's the name of the game now. But we all talk a lot about technology and how it's changing the game. But if we keep the customer in the center of everything we're doing, and that's a huge part of our brand, I think we'll continue to win.
Okay. So if it's about connecting them, James and Neil, these are really large institutions that have been built up over a really long period of time. They have a lot of legacy systems. Onto that, they're stitching new systems. How do you manage, the customer's journey through the bank? How do you stitch all those things together so that it does get more seamless?
Well, I think, first of all, congratulations, Colleen. I'm in a special position to congratulate Colleen because she spent many years at Scotiabank. You have many friends at Scotiabank, and a remarkable run. Congratulations for your service to this industry and your service to the community, which no doubt will continue.
Thank you, James.
You're welcome.
Good friend.
I think a lot about that question, James. I guess 2 words that I've been thinking a lot about recently in the context of how we change our bank is simplicity and velocity. Because I think the external environment for banks is becoming more and more complex from a regulatory perspective, a threat perspective, a competitive perspective, customer expectations. And the more I think about that, the more I think we need to we need to make hard choices. We need to be thoughtful about which countries we're in, which businesses we're in, which customer segments we're going to serve, which products we're going to have, which apps we'll build, which apps we're going to pull out, because we are burdened somewhat, I think, by our enormous size. I don't think there's any question about that. So I think about a lot about how we can simplify the bank to deal with an increasingly complex world. And then I think about velocity. You know, we have a digital advisory council of external members. A fellow by the name of DJ Patil is on it. This is a great business card. Chief Data Scientist, Obama White House. So that's a good business card. And he said that whenever they'd start a project in the White House, he wrote down 2 questions that he put to the team. And I'm sure my colleagues are thinking about this. How do we double the impact, and how do we cut the time in half? And those are questions that I think are very relevant for big organizations, and those are the questions we need to tackle if the customers are going to have the kind of journey through our organization that they currently have with some of the apps that are on their mobile.
And so there are choices to be made, and there's a cost that comes with everything new that you want to do. One stat that I thought was really interesting from earlier this year from another talk that I listened in on was the CEO of Scotia, Brian Porter, said the bank expects to spend about $2.6 billion this year on its technology spend. About 65% of that is on maintaining and upgrading the systems that already exist. The last 35 or 40 is on doing new things, which I think is, something that all banks, correct me if I'm wrong, have worked to increase is the part of that budget that's doing new things. Neil, how do you make the choices about where you're going to place that spend and the hard choices about what you're not going to get into because you can't do everything?
Yeah, I think the last part of your question, James, is probably one of the most important ones. Definitely all the banks represented here. I mean, they're large institutions. They have the capital to do an awful lot. So I think deciding what you're not going to do, becomes, we're not startups where you say, well, I have to have a very, very narrow focus because I only have that type of, startup capital, and I've got to keep it narrow. We do have breadth, and I think that does bring some choices. I think maybe to link to your previous question, I think one of the realities is that the customer is looking for simplicity. I think Colleen had mentioned that, and the organizations aren't simple. And I think a lot of the times we will look at initiatives that either are of exceptional importance to the client, they happen infrequently, but they're real sort of key moments of truth. Or we'll look at things on the other axis that just happen, they may be more mundane, more transactional, but they happen with enormous velocity and enormous occurrence. And so those are the things we think, you're going to have to get those 2 things right if you're really going to win over your own customer. But then there'll be other things that, are about making investments that sort of take down that complexity of the organization and make those investments that hide all the complexity so we can present a much more simple experience to the client. And I think that, to a couple of the comments you led with, is, the breadth of what the clients are asking for is getting broader and broader. It's making the organizations more and more complex. But at the same time, how are you making choices that you're actually investing to reverse the potential outcome of the customer feeling all that complexity?
Yeah. And the other thing I hear is as the ease of that basic transactional banking gets swifter and smoother through some of the digital advances, banks are obviously shifting more to the advice part of the business and pinning some of their hopes both in terms of customer relationships and in terms of, in a financial sense, on being able to provide that advice, anticipate customer needs, that sort of thing. We've seen, lots of ways in which you can run into trouble with people's comfort level about how you use their data, what you know about them. We see this every time there's a hack, things like that. Being a steward of that data is a really solemn responsibility. How do you walk that line between trying to be more responsive to your customer, trying to anticipate what they want, what they need, and not going so far that they feel that you're imposing on them, pushing products on them, et cetera?
Is that for me?
Anybody.
Yeah, so I think that is one of the most important questions that we're facing right now. And, we're actually getting to a stage right now. We have a maturing process in the bank around data innovation. And it isn't just a question of what you legally can do. what are the limits, but what do you want to do? What's going to add business value? What's going to add value to the customer? And we have really some of our most senior folks in the bank from all disciplines working on that, not in a view of risk and control. We have many, many, many committees and safeguards around risk and control, but how do we actually look at enabling and creating value for the customer in a way that makes sense, that protects privacy, where you do have the right consents and all that type of thing. But you're actually, at the end of the day, the rallying cry is how do you help that customer live their life? And again, that's our mantra. Nobody gets up in the morning and says, I want a mortgage or a credit card. They want to buy a home. They want to go on a trip with their family. So how do you think all of that through and help that customer live their life? And how does data mastery become a big part of it? We've been talking, the industry's been talking about data and data warehouses and that type of thing, probably going back to the early 90s. But the possibilities now are endless because the computing power is enormous. And the ability to actually truly know your customer and improve that customer experience, all the tools are there now to do it. And I think that's really the next frontier of banking.
And so with that power in your hands, I think we're still early stages in things like artificial intelligence, but with that in mind, how do you go about harnessing that? How do you go about sorting through, the vast complexity of your business to find what is actually useful to a customer?
I think it comes back to me, just to build on Colleen's points. The word I would point out is relevance. Right, like a lot of this is about knowing your customer. We absolutely need to have the consents, and we need to have those things locked down, and the customers need to know what they're giving us permission to do. And I think we are all good stewards of that process. But I think if you're providing something that's more relevant to the client, they will see value in it. And when they see value in the things that whether it's advice or whether it's a faster, more convenient way to do their banking and therefore live their life, that's of value to client. And I think that, directly sort of takes down any of that type of risk or perceived risk of how an organization is using the data. So I think, it has to be relevant to the client. If the client feels like this is a one-sided transaction, this is all about you pushing a product, or it's so transparent that this is about, you selling me this extra thing that I'm not sure if I really want, then I think your risk goes back up.
I agree. Look, I think the premise has to be there's an exchange of value that makes sense for each side. I think part of the challenge, though, is consumers, and this isn't so much a comment on banking, it's true generally. When we open apps and hit agree at the bottom of the privacy statement, I think quite often people don't know what they're signing or agreeing to or clicking on. And I think this is going to become a larger topic over the next few years, James, and I think each of us is going to have to shape privacy promises to our customers that are relevant, that are meaningful, and that they understand. And we just appointed a new chief data officer, and that's something he's going to be very, very focused on. There's no question that we, and not just us, banks for a very long time have had a lot of information on our customers' financial lives. But now we live in a world where social media, apps and providers, and many, many others have as much or more information than banks have. Mm-hmm. And so I think there's going to be an evolving kind of conversation in many countries about what the nature of the privacy promise must be to the consumer. That's a big topic.
Does that change?
Sorry, if I can just add to that, James, because I think we can say there's all the consents, I agree, and all that type of thing, but I think what we have to face as banks is that we are at the top of the trust pyramid, and I think society holds the banks to a higher standard. Some may say, well, that's not fair, it was very clear, you agreed, and that sort of thing, but I think that's also the reality of what we're facing now, is that the consumer puts a lot of faith in the banks, and frankly, it's a huge advantage. Again, being at the top of the trust pyramid is great for our business model, but it does bring other important obligations along with it. And I think that's something that all of us are sorting through, is not what's the minimum legal standard, but what's the right thing to do, and how do you protect that consumer. Data aggregation is a huge issue. A lot of customers are willingly giving their credentials away and creating risk. So how do you, without being Big Brother, how do you guard against that? So there's a lot of issues. And again, I think we're held to a very high standard, and we should be.
Yeah, and Colleen, I agree with this point. We just had a debate yesterday about this. there's whether it's fintechs and some not very small companies, part of their business model is to ask the customer to breach the contract they have with one of our institutions, to give their credentials to James's point, in an exchange of value to get some sort of service back. And we're only a couple of weeks since the Equifax situation. And so it does bring into question, what are the sort of systemic realities of that being permitted? Broadly and we'd say, well, it's in the face of innovation and that the clients are asking for it. But, I think we're sort of early chapters on what the implications of that are, and I think there should be a broader debate about it.
Does that change the mix of people that you need at the bank? Because, you can hire software developers and engineers, but I know banks have been hiring heavily, PhDs and professors. I think, Colleen, you said you've got anthropologists and sociologists in your design center.
Yeah.
What's the talent pool that you need to navigate that world?
Well, it's totally changing. We want to be at the forefront of attracting the very best talent, whether it's in the technology side. Most of the folks that are joining our technology organization aren't coming from other banks. They're coming from other industries. The hot skills, you have to really get out there, and you have to be very resourceful these days around talent. As you know, we're just in the process of opening an office in Tel Aviv, Israel, around cyber talent. Cyber talent is very, very scarce out there. How do you attract the very best people? We're involved in an initiative called Go North, where we're going and to Silicon Valley via Communitech and bringing expats back to Canada. There's never been a better time to bring people back to Canada, and the political statement, right? And let's go for it.
Yeah.
Let's go for it. Some of the best talent. Look what Vector Institute is doing. Jeff Hinton coming back. That Ed Clark has led the charge on that initiative to make Toronto an AI capital in the world.
Yeah.
Let's exploit that. But all of those skills, again, our designers, they are coming from all different walks of life. You mentioned anthropologists, sociologists, people who obsess about the customer experience and design. Everything is changing, and frankly, I think banks are a great destination for great talent, but I'll put an asterisk on it, not in in maybe some of the traditional and bureaucratic ways that we often run. I mean, we have to think about ways to create more invention and experimentation in our organizations, and really it's an overused word, but more empowerment of people on the ground to get things done. Because we have a generation of millennials that really think a lot differently about their careers and their life, and we have to change. It's not about them changing to accommodate us, it's the other way around.
And James, I went to our digital factory when it opened. It's just a couple of doors down, I think, from your new offices. And I like to tell the story of coming upon 4 young people working around a shared workspace. And I said, where did you guys graduate from? And the answer is an answer I had never before heard at Scotiabank. The answer was, we all graduated from the Ontario College of Art and Design, from the Design Thinking program. And it makes some sense, because it turns out if we're going to deliver your everyday banking needs on something that's 6 inches by 3 inches, that takes some design skill. We got to be really thoughtful about how we use that space, how you navigate that space, and how we create a great experience. So the nature of jobs is changing. There's no question. Each of us, I'm sure, are hiring as many technologists who can write good code as we can find, design thinkers, agilists, data analysts, digital marketers. It's a world of new jobs in a larger universe, clearly, where there is another side to it. I think we do have to acknowledge that certain types of jobs are becoming fewer and fewer in number. But I think it's relatively clear that Canadians want to do their everyday banking anyways on their mobile. And as they do, that will change the function and the future of branch banking.
And so if we're talking about a world of new jobs and in some cases less relevant jobs, I mean, the banks have been really important employers for this country and really important generators of talent. Neil, can you give me a sense, as we go farther down the road of automation, which will simplify some of the more basic tasks that we've had people do, but we also look to create those new skill sets and bring people in who would have been considered non-traditional in the banking world up until this point, how's that push and pull going to balance out?
Well, we're clearly automating an awful lot of the very mundane, sort of interactions that we used to have people doing. So stamping, sort of checks over a counter is going to be a lost a lost skill set. It's all those very low value things are, they're more easily done by the consumer, and technology can make that happen. So you're obviously going to see a dramatic drop in those sorts of activities. Same in the sort of large people operation centers. On the other side, we've talked a little bit about it. I mean, you're going to have the types of capabilities, not to repeat them all, but an awful lot of digital, an awful lot of design thinking, these sorts of things in the more centralized groups will start to really come up. And so that'll be the offset. I think the type of people, though, will be different. And I think about the future all of us are needing to steer through. There's sort of three things that I think about the individual we'd want to hire. And the first one is all the change we just talked about. It's creativity. So you can be an expert in any one of those disciplines, but if you're solving problems, they're not going to be the way we probably solve them in much more linear fashion in the past. Mm-hmm. So you're bringing a creativity around problem solving, and possibly not from our industry. And the second one would be, the ability, just sort of the intellect to get into things that are exceptionally complex. The solutions, the customer problems, the regulation, all these sorts of things. And the last one is, James mentioned agile. I mean, I think the requirement for people who actually work well in teams with fairly limited oversight is a skill that I think you're going to see. So I think, in summary, you're going to have a lot of these simple jobs are going to drop. A lot of the more, and frankly, it's going to be more complex and interesting work, for the individuals on our respective organizations.
That's really interesting. I'll just say, because I've just been handed a couple of audience questions, please do remember, if you have questions, do write them down, hand them in. Some of them will be passed up to me. I'd love to have your questions for the panelists, which we'll get to as well. Let's talk briefly about fintech. The narrative has changed a lot. I think there was a time when there was a lot of talk about disruption and how fintechs were going to very shortly eat the bank's lunch. I think now we've settled into a narrative that is more about cooperation, what they can do together, how you can sort of leverage the new capabilities that they have. But you'd only have to take one look at my inbox to understand how much is being done in this space and how many people are talking about how they've got the next great innovation. How do you go about looking and deciding, where to partner with fintechs, where to compete with them, and how to sort of separate the wheat from the chaff, if you like?
So why don't I start? There was a great column in the Globe and Mail earlier this week on Tuesday, not written by James, but I thought I actually feel I could have written that column myself, honestly, James. But for those who read it, it was, is fintech a threat to Canadian banks? And really the punchline was the Canadian banks do a really good job. Again, back to the question of the customer. And if you always are keeping the customer in mind, providing a great experience, constantly augmenting your capabilities, that you have the trust factor, and frankly, a lot of this goes back a decade now, where globally banks weren't trusted, but again, the Canadian banking system stood tall in the world. And it's not to say that there aren't fintechs that are looking to penetrate in Canada. Look at payments. P2P payments in Canada have been around for more than 10 years. 10 years through Interac email money transfer. The US now, we are just getting new capabilities around. So what's happened in the meantime? You've had disruptors, Venmo, PayPal, coming in and taking that space. And the banks in the US have finally gotten their act together and said, hey, we have a common enemy. Let's go and create a solution around this. The Canadian banks had this solved over a decade ago. So I think if you're always thinking about what your customers need. So back to fintech, I'm a big admirer of fintech. I actually think, fintechs are really forcing banks to disrupt themselves and come up with those. So if you've got a process that's too clunky or it takes too long, you better solve it yourself and get on with it. And I think that's where we look to fintech to say, how do we solve, as opposed to saying there's a shiny object, a butterfly, doesn't that sound cool? There's a million cool ideas out there right now. But how do you actually take, how does fintech help solve your problems? You have to be out in a scientific way, but in an artful way, making the right connections as well. We have some amazing fintech partnerships that are really helping us. Some of you may be familiar with TD MySpend, TD for Me. These are fantastic apps that are really adding value. But again, I'll put an asterisk on this. We are so much bigger than any fintech out there. How do you actually make this work? When you hand over a 150-page legal agreement and the fintech says, I don't have a lawyer. So how do you actually get into a common ground of being mutually supportive And back to, we're talking about regulation, but the regulator looks at us and says, that's great, you banks. I don't regulate fintech, I regulate you. So you better get it right. With really, really high confidence. So we have a practice around this at TD, which is getting more and more sophisticated, but it's also being out in the market. I have our chief digital officer talks to a new startup every single day.
Right.
So you got to be out there, and I think there's a lot of great ideas.
And I'd add, sorry, no, go ahead, Neil.
Thanks, James. I would just add on to that. I would say a couple of things would be, I think, to your point, I absolutely agree. I think 5 years ago, there was an awful lot of uncertainty, and I think there's an awful lot of concern about disintermediation. And I think, in retrospect, we're seeing probably a lot more conversation about how we can partner and make things better for the customer than we are about sort of losing market share. And I think the reality is, if every one of the Canadian banks just stood still and said, "I'm going to play the cards I've got," circa 2005, we should have all been really worried that they're going to, move our cheese. But of course, we're all investing, and the fintech doesn't have the breadth of offering that each of us can offer a consumer. So there's a built-in convenience, and there's a built-in, we talked about trust in the top of the trust pyramid. So there's an awful lot of things that if we're providing a co-equal capability and service that these fintechs are, and they keep raising the bar that we're obviously needing to match, I think that's a good thing for the consumer. I think the other thing that we probably I'm getting much more excited about is that fintech's actually solving one of the industry's biggest problems. And James, you mentioned sort of legacy technology. Totally. And I think for the longest time, we were all focused on these monolithic apps from big blue chip technology vendors. And we're starting to see fintechs come in and not solve, we were just talking about solving problems for the customer and improving the service and the experience. But now we're hearing more and more about helping us solve problems as institutions we've not been able to solve by ourselves. And I think it's a whole other chapter in front of us.
Okay, great. I have lots more questions I'd like to ask, but I also have lots of great questions from you. So I'm going to move to a few of those, and we'll try and move through these reasonably quickly if we can. Does the financial literacy of your customers have any impact on the future of banking?
Yes.
How so?
Absolutely. I think this is one of the promises of technology. Is I think Canadians need financial advice. And I think it's getting easier and easier to provide high quality or reasonable quality financial advice with technology. And I think, James, this is one of the promises of the future of branch banking. The function of the branches will be to deliver advice to Canadians, whether it's on retirement planning, financing a wedding, financing a post-secondary education, whatever is meaningful in the customer's life. And part of what we're seeing is that we're able to, and it's still reasonably early days, but we are able to build better and better financial planning tools that our advisors can use to sit down and have high-quality conversations with customers. And so, I think if we do that well, literacy goes up, and I think banks will be in a position to provide very good financial advice to Canadians.
Just on our brand evolution, you may have seen the stat that we put out there. 79% of Canadians do not have high confidence in their financial future. That I would almost say is a tragedy, honestly, in a wealthy country like this. And I think the banks, and certainly we're very focused on playing a very key role in increasing that customer confidence in their future. And financial literacy is a broader aspect of all of that. But I think that's a higher calling for all of us as bankers to create that, because this is people's lives.
Yeah. Thank you. Sorry, next question I was going to ask. In regards to the changing jobs and larger focus and push towards digital channels, how do you feel branches will evolve and change?
I think we've covered a lot of it. The customer is not only asking for digital, they're asking, we sort of think about it as this is the and question. I want all the things you've ever given me up until this point, and I want all these new things I can get from every other digital experience I've had. So they're going to want to have branches, I think, is the short answer. They're not going to do the things that they've typically done in them. They're not going to go as frequent. They're not going to be these low-value transactions, but they will be places, to James's point earlier, for sort of large A advice experiences, financial planning, retirement planning, estates, moments of truth like buying a home, negotiating your first mortgage. So they're going to be there, but what happens inside them, and therefore the skills of the people who work in them, and how we hire and recruit and train and incent and manage will all change dramatically.
And building digital literacy. And I think we're in a stage right now where we really have to help our customers, because actually so many of the digital solutions are much better for the customer. Take mobile deposit check capture. From the comfort of your home, you have a beautiful experience. You actually keep the physical check. But it's surprising, it's still a relatively low percentage of total deposits. Take the time to help that customer learn to use the app, use the technology to improve their life. And I think that's a big role that the branches will play in the next number of years.
Okay, thank you. I have one rather pointed question, which I'll ask from the audience. It says, when the Bank of Canada cut its prime rate in 2015, the chartered banks didn't pass on the full change to consumers through lower mortgage rates. What explains
James's turn.
that series?
James, what were you thinking?
I've got a specific one for James here. What explains a series of choices by banks to preserve margin at the expense of consumers?
Well, let me start on that.
Excellent.
But I mean, it's a fair question. But I want people to know that I can't think of a single consumer product or service that this industry offers for which Canadians don't have, depending on the product or service, 6, 8, 10, or 12 choices. Okay? You got your big banks, you got big credit unions, you got the CASE network, you've got monoline players, you've got US banks and certain products. I think this industry, and I don't think this is widely understood or acknowledged, and I accept that, but I can't think of a product or service for which Canadians don't have approximately a dozen choices. This is a competitive business. And I think it's in the context of that rates are set. And, if you look at bank, now I'm not going to defend the bank, but if you look at, well, I will. That's why I'm here.
You're doing a great job.
We're right behind you, Jim.
If you look at if you look at bank margins over, James, you picked the period of time. They've all but collapsed. They have all but collapsed. And so in a rising interest rate environment, you will see bank margins return to what are more normal levels, measured over some reasonable period of time. But I promise you, it's in the context of an industry that is day in and day out intensely competitive.
Mm-hmm. Maybe just sort of kidding aside to support James in that, the 2 points I don't think have probably been surfaced enough is, if this was a different industry and your cost of goods, the inputs into your sort of cost of goods sold as a commodity were changing, you'd expect the end product to probably change in price. And the reality is that the overnight rate and our ability to raise funds, and next to the CFO would probably do a much better job explaining this than I would have, but it was more closely linked to that in terms of those decisions than, that was obviously one of the factors. Competitiveness is absolutely a factor. And the other part I don't think we have talked about, in Europe as an example, there are negative interest rates. You never saw a negative interest rate in a single product that I heard of in Canada. A lot of the products floored, but we never saw negative interest rates. And so it's a much bigger topic than I think has really been written about to date.
My journalist Gene tells me I want to segue from there right into the housing market and B20 rules and all sorts of things, but unfortunately we are out of time, so I'm going to have to wrap it up. I want to thank all of you very much for joining me and for sharing your thoughts, and I'm going to call Jillian back up to the podium, please. Thanks for your attention, everybody.
Well, I think that was an interesting, fascinating, and entertaining panel. On behalf of the Canadian Club of Toronto, I would like to thank you for sharing your wisdom, for being stewards of ships that are definitely not easy to sail. For 200 years, Canadian banks have established a tradition of innovation and customer service. Today, even amidst the backdrop of escalating costs, stringent regulations, and mounting competition, the banking industry is thriving. The details that you provided about how the experience is being transformed were very interesting. Your ongoing commitment to innovation is visionary, but what I found most fascinating was the commitment to the customer, which has always got to be at the center of everything that banks do. Please accept our sincerest wishes for continued success in your leadership roles, and to Colleen in particular, an outstanding career in the industry, and congratulations. And to our moderator, James, I think you have an interesting story to pursue here. We are duly impressed with your stellar moderating skills. The questions you posed helped to generate a highly engaging discussion, so thank you. Before we conclude, here are some upcoming events at the Canadian Club. On Monday, October 16th, Canada's permanent representative to the United Nations, the Honourable Marc-André Blanchard, will join us. And then the following Monday, October 23rd, the Honourable Bill Morrow, Ontario's Minister of Municipal Affairs, will speak to us about building better communities. To order your tickets or to learn more about the club, please visit our website at canadianclub.org. You can also join the conversation via Twitter and Instagram by following us at CDNCLUBTO or by using that hashtag. I would like to extend another round of thanks to BLG and RBC for hosting today's event. We would also like to thank mediaevents.ca, Canada's online event space, and VVC for live streaming today's event. To learn more about the club, please visit us at canadianclub.org. Thank you very much for attending today. We look forward to seeing you again soon. Have a wonderful afternoon. Merci et à la prochaine.